All right, good morning. I've got Ethan Vera here from, is it Luxor?
Luxor, yeah.
Pronounce it again?
Luxor.
Luxor. Okay, because I know the Luxor in Vegas. I was introduced to you by JP Barrick. I do a lot of mining stuff with him. He told me what you're doing is super interested. Other than looking at your website, I haven't seen anything. I didn't get due diligence or any kind of package beforehand. So really interested in learning about you and what you do.
Great. Yeah, it's nice to be on. Thanks for having me. JP is someone I met quite a few months ago in the mining space. Both kind of young guys trying to build businesses. So really love what he's doing over there at Mining Store.
Mhm. Great, great. So tell me a little bit about what Luxor is.
Yeah, a bit of background on the company. We started about 2.5, 3 years ago out of college. For us, a really interesting part about Bitcoin was the idea that there's no central planned federal bank that prints money, and that anyone with a machine, internet, and electricity can take part in that minting process. So we're really just fascinated by the idea of taking raw compute power, turning it into consensus on the network, and getting paid as a result. So we started building mining pools, which is exactly that. On a daily basis, we connect with thousands of miners who sell us their compute power. We buy up that compute power, otherwise known as hash rate, and then go and mine blocks with it and get paid as a result. So right now we run 11 different mining pools, uh, connecting with about 12,000 miners globally a day, predominantly North America. We
So that's
started off as a
that's pretty small. So I'm sorry to interrupt you because I mean you're not mining in exahash at this point. What kind of mining have you aggregated at this point?
Yeah, so we started the company with altcoin pools. So our first pool ever launched was for Siacoin, and then second was for Decred. So over the past 2.5 years of scaling up our pools, we've definitely focused on altcoins first. So we now run the world's largest Dash pool, the largest North American Zcash, Decred, Horizon, and Siacoin pool.
That's
So
pretty cool.
yeah, I've been focused in those areas for now. Obviously,
Why didn't
Bitcoin
you
is
mine?
the biggest.
Why didn't you mine Bitcoin?
Yeah, it's maybe less intuitive, but for a mining pool that does a pay per share scheme where basically you pay upfront for the expected value of hash rate,
Yeah.
you actually need, as a mining pool, quite a bit of liquidity to cover that. First off, you only get paid, the blocks only mature after 100 blocks. So you already have that cash flow difference. Then you have to deal with the luck variable of mining. And so a mining pool takes the luck out of mining for the miners themselves.
Yep.
So uh, to front that, you need quite a big liquidity pool. And so going straight into Bitcoin, you need to be pretty well capitalized versus the
So
approach we took.
yeah. So let me understand something. In your scheme, if I was participating, you're going to pay me a steady stream of Decred if I was mining Decred per se, or that's what I had bought from you. And you're eliminating um, me missing out on a block reward because you've just smoothed out that financial plan for me. It's almost like a structured investment vehicle.
Exactly. We smooth that out because all of your machines, Decred or Bitcoin, all the hash rate you generate has an expected value. Um, and so we just constantly pay you that expected value. The actual value at 99.99% of the time will be zero, but then that 0.001 is going to be 100,000. So we take that risk variant as the mining pool operator.
And how comfortable are you with these altcoins mining in that space? Because, there's really smart people that are coming hard at altcoins saying 99% of them are run by delusional founders and they're just garbage. 99% of them. We're all hoping that 1% of them show up and build, unbelievably innovative companies. But for the most part, this is garbage. So you're talking to me about Zcash and Decred and other altcoins. Why should I be interested?
Yeah, well, I don't know if I disagree that 99% are garbage.
Yeah, I didn't say it,
Yeah,
but that's what
that's a fair.
that's what really smart people think.
Yeah,
But I'm asking
and
you
we
why
try and
why should I be interested in Decred?
yeah, we try to pick the 1%. Obviously, we get it wrong quite a bit, and we have in the past, and we try and delist it once we think that that's the wrong case. But when we created this company, we actually thought of ourselves as a mini venture capital firm, I guess alternative VC of sorts, where instead of investing capital, we're investing time into building mining pools. And our payout is that token over the course of the lifetime of running the pool. So we try and take it from a VC approach where we look at the project, we think, does this add value to the community? Is this an actually interesting technology? And then are these economics like make sense from a mining perspective before launching a pool? So I'm sure like a lot of people think that some of the altcoins we run aren't in that 1%, but we try and thrive to pick projects we believe in, like the Sia coin project, like the Monero project, and those sort of tokens.
Got it. And Monero, in particular, how are you dealing with like an exchange for liquidity? Because some of them have been delisted, as I understand. Privacy tokens have been delisted from major exchanges. How are you dealing with that?
Yeah, they've been delisted and they've had very bad price action because they've taken the privacy route. But with all these new Bitcoin chain analytics, you're starting to see even the value of these privacy tokens like Monero. You may be able to do various things to mix up your Bitcoin and get away from that. But if it's not inherently built into the code, there's definitely going to be some vulnerabilities in the system.
My and this may be incorrect, but please correct me if I'm wrong. My general feeling about privacy tokens is their best value and highest use is if you are the miner who's taking custody of that mined privacy token. It's a privacy token that is truly untraceable at that point. You've mined it, it has no activity on it, and at that point, if you wanted to really go down that direction of complete anonymity in terms of transactions, that's how you would do it, right? You wouldn't necessarily, you create a wallet, it's anonymous, and you'd use your privacy tokens. I just don't know about using a third party to mine it, because there's a fair amount of chain analysis that can find the Monero if you're playing that game.
Yeah, I see the value of mining it directly too.
Mm-hmm.
I would say like for the most part, we built our business, we bootstrapped it out of college without taking any investment capital. So altcoins was a way to do that. Now we're definitely more focused on Bitcoin these days, though. It's the larger market. It's about 70% of proof of work emission. So that's where we're really focusing over the next like 2 to 3 years of the company life cycle.
So help me understand like the Bitcoin strategy. Are you essentially just selling hash rate?
Right now, we act as a buyer of hashrate.
Right,
so
but I mean, is there just an arbitrage play here? You're going to miners. You're saying, I'm going to pay you, X amount per, terahash per second, or however you guys model it out, and then you mark it up, and then you sell it to a third party.
Exactly, yeah. But the interesting part about this is the third party we sell it to is usually the Bitcoin network itself. They're the buyers.
Interesting.
Bitcoin network is the biggest buyer of hash rate, and then mining pools kind of sit in between as a middleman of sorts, where we buy hash rate at around 98% of the expected value, and then go and sell it at 100% of the actual value to the Bitcoin network.
Interesting. And who is the natural seller of hash rate right now? Like, how are you picking it up? You can't be going to some chicken coop miner and buying his, whatever. But I mean, where are you getting the bulk of your hash?
Yeah, so you labeled it correctly. It's anyone with a machine, an ASIC.
Interesting.
And that's definitely moving more towards institutional and enterprise. Like, some of the guys you've had on recently, the mining store guys, block fills, everyone in that ecosystem. So it's really quickly getting institutionalized versus 2.5 years ago when we were connecting, it was like guys with 10 machines. Now, mega facilities.
Yeah, Ethan, this is actually pretty interesting. Like, if I wanted to get into mining and I don't want the brain damage of trying to import rigs, set up some type of a mine, and then put the IT infrastructure in place, both from an OpEx perspective and, hiring an IT person. People think these things just run autonomously all day, every day. They don't. They break constantly. They switch off. There are power surges, fans break. I could go on and on. You have to have someone there sitting on top of the mine, making sure it's running optimally. And then you have to send it into some type of mining pool per se, potentially. You're saying to me, you don't have to do any of that. You can make your investment in Luxor and buy hash just like you're mining and gain the benefit of it. You have now your mining exposure. Is that it?
Yeah, and it's really the next step of the company, which right now we're acting as a wholesale buyer and refiner of hash rate, where we're the only buyer. We think that there's really it's still an incredibly immature ecosystem that exists today in terms of hash rate markets,
Yep.
where there's tens of thousands of miners, but only a handful of buyers being mining pools.
Yep.
So there, any market where you have that imbalance, you're going to have bad pricing and bad pricing discovery. So our goal for the ecosystem to improve it is really to open up that buy side, allow more participants to come in and get a true value for hash rate. So if I asked any miner right now, like, how much is your hash rate worth on a terahash basis, they couldn't give me the right answer. They could estimate, hey, I think it's worth 8.1% because I looked at what to mine, but they don't have the exact number because there's no actual liquid marketplace for a hash rate yet. So what we really want to build is exactly that, a marketplace where buyers and sellers can come together, get better price discovery on hash rate, and really start building up traditional markets for hash rate as a commodity.
But wait a minute. This is a simple equation, and maybe I'm missing it. You literally take, your terahash, and you take your price per kilowatt hour. You would divide that, and now your price essentially, without you're excluding some OpEx, but what your price per hash is, right? You can get there in terms of the math. That's the price discovery, right? So you may charge me, I don't know, 3 cents. I don't know what the number is, but you can get there. Why is that so difficult? Is it because people don't understand how, the mining algorithms work?
That's the cost per terahash. So you can, if you know your operations well, you can quickly determine how much it costs to produce one hash.
Yes.
But how much is it worth? Like, how much can you sell it for? And that's what is an estimate at this point.
Right. It has to be the base price, like my all-in cost plus margin. That's how much I would want to sell it for, or I would just keep it. There'd be no buyer, right? I mean, you can't take it 2x to the market. Maybe you can. Maybe you can.
Yeah, right. In the current system, you get what's called like a pay per share rate from a mining pool, and that's fluctuating pretty often. So that value of hash rate is up and down depending on the token price, depending on network difficulty, depending on transaction fees, all of that baked in. So that value of hash rate, like how much you can actually sell it for, is actually quite volatile.
Yeah.
And it's really separate from your costs. The market determines it. It's mostly based on the Bitcoin network commission, but also a few other factors.
Yep.
And that's kind of fluctuating a lot right now. Right now it's at like 8.1 cents a terahash.
Yeah. That's what I was saying. This shouldn't be proprietary information. You can figure that out. The public can figure that out. So you said it's about 8.1 cents per terahash. And that's probably pretty darn competitive in North America. When I think about, if you're mining at 4 to 5 cents a kilowatt hour, you're crushing. You're pretty much doing pretty darn well.
Yeah, it's really hard. A few things to unpack here. I think the reason I was saying it's not an exact number yet is because that's based on an estimate of how much you can make from mining at the Bitcoin network. But in reality, there's a bunch of other factors that you're uncertain, like what are the average pool fees across the industry? Because that's the actual value hash rate changes hands.
But can't you estimate, just say 1%?
You could get close, but you wouldn't get like a perfect value.
Understood.
And then the other point too is that Bitcoin is obviously the big coin here, but there are other SHA-256 chains, and so the value of your hash rate is really the value of SHA-256.
So, like, if I wanted to mine Grin, for example, is that what you're talking about?
Other chains on the same algorithm. So Bitcoin Cash, BSV, Digibyte, Terracoin. I think there's like a dozen other. But we're moving more into this world where you mine a single chain and get paid out for it, to now you're mining multiple chains based on profitability. That's really where the industry is heading in the very short term,
Hmm.
is taking away the idea that you're generating Bitcoin hash rate. Because in reality, your machine's producing SHA-256 hash rate. And that can be used for a multitude of cases.
And are you working with people who are running GPU mines or only ASIC mines or both?
All ASICs.
All ASICs. Interesting. All right, cool. And you're based here in North America?
Yeah.
Yeah. How big is your
I'm
team?
up in, it's 4 people right now. We're kind of spread out remotely, especially with the current situation. But we're based in Chicago, Seattle. I'm up in Vancouver, Canada, and then we have one team member in Uruguay.
That's awesome. That's awesome. So what's next, or what are you trying to do with the company right now?
So the immediate step is to build the spot market and get that value of hash rate. Basically, instead of now going to a mining pool and negotiating one-on-one, you can now go to an exchange, and those mining pools need to place bids on your hash rate. So we're really changing the market from OTC to exchange traded. And with that, we hope that there'll be better price discovery, more buyers, so that the value of hash rate will increase, and just overall more transparency in the industry, which, if we want hash rate to be its own commodity, we think is like a necessary tool to build.
Interesting. And why do you feel that way?
I think long has, mining pools, especially in China, benefited from how opaque the industry is. Miners really can't verify that they're getting paid the right amount for their hash rate, and it's really a black box right now. You get quoted a fee on Telegram or WeChat, and you kind of just trust that that fee is right. You accept it, and you kind of move on. We think that's a immature way for the industry to run. We would like more transparency, and I think that's going to become increasingly important as institutions come in. Is like, okay, our machines produce hash rate. Why aren't there traditional markets built for this commodity like there are for oil or even electricity or
Yeah.
hog mix or whatever it is?
Didn't this industry have to hit a hard reset in 2017? I thought Genesis tried to do cloud mining, and the SEC just came through and shut it all down. If you were selling hash, and they just wanted nothing, they didn't want it going down. Am I missing that?
No, you're right. I think, yeah, in 2016 or 2017, South Carolina hit Genesis, and then a few weeks ago, the Texas regulators had a cease and desist against ultra mining.
Yep.
So I think if you're structuring contracts, like long-term contracts based on hash rate, that passes a Howey test, and that is a security. So you have to get properly licensed for that.
Yep.
The marketplace we're trying to build is very different than those cloud mining contracts. They would just be on a spot level. So it'd be less of like a contract being formed between the buyer and seller. It's a purely a spot market where miners can come liquidate their hash rate. They have no obligation to sell. They're not locked into a contract. But obviously, hash rate is an entirely new asset class, so we need to make sure that we're talking with the regulators and getting the right guidance there.
I mean, do you have the war chest and the capacity internally to actually do that work and make sure that you've structured the business in such a way that the SEC isn't going to come and shut you down? I mean, I'll tell you this, that's a complete non-starter for me from an investment perspective. I've been around a while now, and I've seen it all happen, and we've worked with regulators on these issues. So that's a big one for me.
Yeah. Luckily, we have done a lot of work into it. We've also just brought on a new shareholder into the company for the first time ever, an ex-director of Fidelity, ex-derivatives lawyer. So he's been helping us navigate the U.S. regulatory landscape, which is quite tricky.
Yeah.
And it's obviously something that we, think about a lot and spend quite a bit of time on.
Sure. And the company's domiciled in Vancouver, in the United States, in Latin America. Where are you?
In the United States, yeah.
You're in the United States. Okay, so you have to deal with the regulators. Are you actually using foreign exchanges then, or where are you doing your business? In regards to raising fiat.
Raising fiat from customers or from investors?
Well, like just producing liquidity. Are you doing any liquidity,
Yeah.
or are you just sending me the tokens I'm mining? I mean, how does that work?
Yeah, so historically we've been sending miners their native token that they're mining. So if you're mining Zcash, we'll send you Zcash. We're
Yep.
moving away from that. We have a product called Catalyst where instead of buying your hash rate in the native token, we're now buying it in Bitcoin. So we're quoting you a fee in Bitcoin, and we're just buying your compute power in Bitcoin. And that's really what altcoiners mostly want. They do need to pay their electricity bill. So if we can get them Bitcoin right away, it saves them a step in that conversion process.
Very
In
good.
terms of us internally, we just work with a number of US exchanges and kind of best pricing companies that kind of aggregate volume across exchanges.
Yep. And how do you provide security from, hacks, et cetera? I mean, what's your distribution like hold period versus pay period? Do you pay me every week, every month? Do you guys get arbitrage on holding? I mean, how does that work? And I'm simply talking to you
We
as a customer right now. If I was going to participate in this scheme, I'd want to know how you pay me. This shouldn't be proprietary. It's just, how do I get paid? I want to mine Zcash with you. How long are you going to hold the Zcash before you send me? Is it
yeah, and we really don't like see ourselves as a scheme, right? We're just a purchaser of hash rate. So as soon as you send us hash rate, we instantly reward you in Bitcoin. And so if you have a user account with us, as soon as we validate that the hash rate is right, we'll start crediting your account. And then every hour you can withdraw.
okay? Cool. And
So
is
it's
that
like
my
paid
wallet
upfront.
or is that your wallet?
It's paid out to your wallet.
It's paid out to my wallet. And then how do you protect against default? So I owe you money. You're providing me goods for a service. How is that exchange done in such a way to protect Luxor?
Yeah, really, we have an internal share validator that we can instantly validate that your hash rate is doing real work and that it's valid. And so we can do this instantaneously. Basically, every like millisecond, you can send us a share, and we can instantly validate it and pay you out. It all happens in a matter of a millisecond.
And you're taking
So
your fee on that transaction. So every time you pay me, I'm paying you as well.
we don't really see it as a fee so much as a discount. So if you send us hash rate, we quote you at a price that's about 98% of our expected value, and we pay you that right away. And so we're just buying it at a slight discount to what we think it's worth internally.
And so what is the fee structure? Is it 2%?
On Bitcoin pool is 2.5,
On 2.5.
but
Mm-hmm. And what's the difference between Luxor and Slush Pool?
yeah, really, I don't think there are large differences between most mining pools these days. It's pretty commoditized. And the reason is that mining pools are just buyers of hash rate. So there's very little differentiating factors they can do amongst them. And that's really why
I
we
pay
think that.
Slush Pool 1%.
Yeah, so with Slush Pool specifically, I think it's actually probably the exception in the industry. So when I make these generalizations of how the industry works, it's mostly based on this payment method called pay per share, which the mining pool pays you upfront for your hash rate on the expected value, and then in return, the pool takes the actual value. 95% of the industry works like this, so I generalize it for the whole. But in reality, Slush Pool is the exception here, where they do a method called PPLNS or score method. And instead of paying you on the expected value for your hash rate, they pay you on the actual. So you mine with them. If they find a block, they pay you out a portion of the reward based on how much hash rate you contributed.
That's right. That's right. So is that model better or worse than the rest of the market?
Yeah, so some miners definitely, will prefer that and go with Slush, but about 95% of the market is on the other method. So I think the market's spoken that the other method's a lot better for miners.
Why?
Miners don't
I
want to.
don't get it. Explain to me why it's better.
I think miners really just don't want to deal with that luck variable. So they have very consistent cost bases. Like you're pulling in energy, you got to pay those bills. And so you don't want months where you're, down 30%. Even if you may be up 30% the next month, you want to stabilize your revenue because your cost basis is stabilized. So, all things aside, miners would way rather prefer a scheme where they get paid out consistently versus, very variable and volatile payments.
Interesting. Has major or institutional money started to look at this mechanism like the one you've described as a way for them to get exposure to Bitcoin through mining as the ultimate dollar cost averaging strategy? Is that kind of the play?
I think it is in mining as a whole. So you're starting to see large institutions come and actually purchase equipment, invest in facilities, or host with other people, and start using that as a method to dollar average. I think when JP was on, he was talking about that analysis where if you had mined since 2016, depending on your treasury management, like you could have outperformed Bitcoin. Now purchasing hash rate, it's a little bit trickier because you lose your operating angle. It becomes a very different game. So
When you
if you're
say you lose
producing
your
hash,
operating angle, you lose your operating efficiencies, like that kind of area where you can gain arbitrage.
your operating competitive advantage.
Mm,
There's really good mining executives in the industry that are getting, sub 3 cent power or running just very efficient operations. They know when to time machine purchases. Like they're killing it.
yep.
There's quite a few of them in the industry. And so if you're just buying hash rate on a marketplace, you're giving up your operating competitive advantage. And now what you're going to take on the risk of is basically quantitative trading. You're going to be trying to buy hash rate and then arbitrage it to other chains. So you can buy some base level of SHA-256 and then try and profit switch it between the chains and earn some arbitrage. It goes from like a very, typical mining firm operating to like a trading desk in New York or Chicago that's going to engage with it.
And are you using any AI algos to do that that swapping to gain some operational efficiency, or do you have a human sitting there making a decision on which chain to mine?
So somewhere in between. uh,
Cool.
yeah,
And
after
if
this
that's
call, I've been.
yeah, and if that's proprietary, just skip it. But it's something that
Oh
you
no, it's not.
that's cool. If you can
Yeah,
describe
so
it, I'd love to learn.
I think this is really the most fascinating area of mining right now. Is historically Asia's dominated mining and North America's dominated quant funds, and we're now going to bring quant funds into mining through these switching algorithms. So our company has built a pretty, in my opinion, like not well thought out switching algorithm. Basically, we're just looking at okay, what's the most profitable to mine based on market liquidity and their current profitability and switching. I think you can get a lot more sophisticated than that. Like there are trading desks that are quantitative based in Chicago, New York that will engage and make very interesting switching algorithms.
Who's doing the very best in your opinion of quant trading with switching algos?
Right now, I think Luxor, our company is
Awesome.
for now because those companies don't have a
It's
great
big
avenue
talk.
to buy.
That's big talk.
Yeah. Right now, our switching algorithm for Equihash is like averaging around 5 to 6% uplift over Zcash daily. Um, Basically, every few minutes, we're reassessing, okay, which coins are the most profitable to mine, and then switching between 4 different chains on Equihash, being Zcash, Verizon, Pirate, Komodo. So while still a rudimentary algorithm, I think it is still at the forefront. But I do think that in the future, like these trading desks that are doing this quantitative trading already will have way better algorithms. It's just a matter of time and a matter of having the right marketplace where they can go and get their hands on hash rate like we can.
You know, I'm going to introduce you to Travis Kling at Ikigai because I think he may be really interested in the services that you're talking about. And in full disclosure, I'm an investor personally in Ikigai, and also my fund is an investor because this is really interesting to me. And they're using a quant strategy, I believe, in their trading, but you may be able to enhance it in some way. Plus, they have a little venture arm that they make investments to. So it's just kind of an alley oop to you.
Yeah, that sounds great. I appreciate it.
All right, this is cool. Is there any way you can send me a deck so I can look at kind of what you're doing? And in that deck, I don't know if there's kind of an ask, but if you can make sure like the last slide says, this is what I'm looking for. these are the terms, high level. You don't have to send me legalese. Just say, what I get for an investment. This is really interesting.
Yeah, we're actually raising our pre-seed round right now. So I'll send over our investor deck. And don't mean to drag this conversation on too long, but the one area we didn't talk about was financial instruments. So
Hit me with it.
great. Yeah. So going back to the roadmap quickly, once we build the spot market for hash rate and actually get real price discovery on the value of hash rate itself in dollars per terahash, we can then go and start building incredibly powerful and interesting financial instruments on top of the value of hash rate. So the plan is to launch a futures market to start, but then we may look into options and swaps and other exotic instruments.
Yeah.
But we really think this is a necessary product for the market. A lot of the guys you talked with, like Neil at Blockfills, like hedging is a big part of how they look at risk in the mining business. Right now, there's no way that miners can fully hedge their operations.
Yeah.
They can do partial hedge, like through difficulty or Bitcoin put options, but unless there's derivatives built on hash rate, which is the actual commodity their machines are producing, they can't hedge. So we really want to build those tools so that they can, start hedging their operations.
I tried to build something, and it just got too complicated in the insurance market for this. Where you set a floor and a ceiling, and can give people exposure to Bitcoin and de-risk it. Like literally go to the market and say, I'm going to give you a zero. You can't lose your money. Like at the worst, it could be flat. At the best, you're going to make 10%. I capture all the upside beyond 10%, and you're guaranteed a floor. And you can do that with different instruments, as you've described. Blockfills actually uses, a put call strategy that's interesting. Yeah, look, I've got a fair amount of brain damage with this discussion as well. There's a guy called Thomas Flake, and he owned a pretty big mine in Virginia called Because, and they had put together like a stellar team of people who had, I think they were from, a lot of them were from like the Chicago Mercantile Exchange, and had built some pretty sophisticated stuff, and they went bankrupt.
It seems to be the story of the industry.
And that was like 2017, 2016, 2017. I mean, they had a really big mine. Like I really wanted to invest. I don't know if they're still in operations. Thomas is a brilliant guy. He works for NASA. He's a brilliant guy, but just, there was all these complicated financial mechanisms that they were trying to structure, and it was just too early.
Yeah, I think we're starting to see it now. 2017 was definitely too early. Now you're really starting to see the institutionalization of mining. And what that means is that those miners are really demanding traditional tools to hedge out their risks in their operations.
Got it.
And so if you can build those hash rate based derivative products, I think it's going to be really helpful and usher in a new era of North American institutional capital, and that will help this theme of moving hash rate to the US.
It's pretty cool. It's pretty cool. How bullish are you on Bitcoin, and where do you see price moving? And I'm not asking it to you as a gimmick. I'm asking you this because if I was going to get in the mining business and my payouts in Bitcoin, I'm spending a certain amount of money to mine Bitcoin at this price. It's a highly volatile asset. That volatility may smooth out. What's your opinion?
I'm very bullish long term. I just quit my corporate job last year. I was working for Goldman Sachs doing investment banking. So coming into this industry, I'm obviously thinking that it's going to be huge and that it's going to be very impactful and beneficial for society. Short term, I'm not quite sure. We try to model everything out, internally based on stable Bitcoin prices. But obviously, in the back of my head, I'm thinking for the upside.
Got it. You got any price predictions?
Not on the Bitcoin front. I try and stay focused on the mining angle, like predicting the value of hash rate moving forward. That's what I'm really interested in. It's what I want to build markets for. It's what I like trading.
It's awesome. All right. So thanks for your time today. If you can, you've got my email. Just send me everything you got, and I'll socialize this due diligence call to the team. I really appreciate your time. This is cool. I don't know how often you
That's
see
not,
JP, but I think he's in Iowa in a Connex container or something like that.
I think I'm talking to him later today, actually. But appreciate the time. I know it's not the easiest concepts to understand. So wherever I can be helpful, I'd love to reconnect or just answer questions over email.
I've spent a fair amount of time in the mining kind of space, so I enjoy these kind of discussions. It's always learning for me, and I won't even pretend to understand all the financial instruments that you're talking about. A lot of them I really only have knowledge of through my own kind of investing personally. That's why I do these calls and like to have this type of interaction, because it's through the act of you asking me questions and putting pressure on me that I learn, right? It's like see one, do one, teach one. And you've already jumped down the rabbit hole, come up and said, I want to start a business in the space. Well, give me all you got. You're the expert. I'm not. I've just got a little bit of money.
You're being humble. I think you're an expert in most of these subjects.
Listen, I really enjoyed it, and we'll talk soon.
Cheers. Thanks, Jason.